Hello investors, welcome to the channel. Here I talk about long-term investing in companies that pay a dividend. This is known as dividend growth investing. My name is Doan, and today we're going to start off with looking at how the market ended for the week and then look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is up 2.45%. For the Nasdaq index, it is up 2.47%. And lastly, for the Dow Jones Index, it is up 3.80%. The markets are up this week as many companies report positive earnings. In addition, the jobs report that came out on Thursday showed that 1.8 million jobs were added in July. Just taking a look at these graphs over here, we can see that at the beginning of the year, the S&P 500 was reporting at around 3,200. It dipped down due to the pandemic in late March and has now made a full recovery. In addition, the Nasdaq has done a full recovery as well, as gone beyond where it started from. If we take a look here, it started around the 9,000 points, fell all the way down to about 7,000, climbed all the way back up, and recovered in June, and has gone even further than that now that we are in August. The Dow Jones, however, has not made a full recovery just yet, but it is pretty close. Again, if we take a look at the beginning of the year, the Dow Jones Industrial Average almost hit 30,000 points, fell down about 10,000 points to around 18,000 points, and has slowly recovered, making its way down only about 5%. So this is pretty good news. If you stayed in the market instead of panic selling when the market dropped, you should be about even. And if you were like me, you held on to your portfolio and bought even more after the dip, then you should be highly profitable in the majority of your portfolios. Now, there is some news that may affect the markets in some negative way. Even though job reports were positive, there are some tensions between the US and China, and this is besides the coronavirus. President Trump threatens to ban WeChat, a messaging app owned by a Chinese company called Tencent, as well as crack down on the popular social media app TikTok. TikTok is owned by ByteDance, a Chinese company. Microsoft has been in talks with ByteDance to purchase TikTok for a while now, though this may not happen unless they act fast. The reason for the ban, as described by the Trump administration, is due to the information that China steals and uses data from users of TikTok and WeChat. To prevent potential stolen data, President Trump wants a US company to control the two platforms, or else he will ban them from being used in the United States. Moving onward, let's talk about the COVID-19 numbers. Now, due to a lot of people going out, not wearing masks, and not following social distancing guidelines, there has been an increasing rise in the number of COVID-19 cases. This website right here is organized by Johns Hopkins University, a well-respected and established institution of education. As of this recording, the university has counted over 19 million total confirmed cases in the world, counted over 700,000 confirmed deaths, and has shown that the US has reached over 5 million total confirmed cases of COVID-19. This makes up more than 25% of the total cases in the world. Given the current state of affairs, it appears that this pandemic will continue to affect the lives of many people until a vaccine is manufactured, distributed, and herd immunity kicks in order to protect the overall population. In the meantime, the number of infected people will continue to rise and will soon be followed by the number of deaths. As the pandemic continues to rage on, stimulus talks on top of Capitol Hill has collapsed due to Democrats and Republicans unable to meet in the middle in order to pass a bill. After a 3-hour meeting on Thursday evening between senior administration officials and Democratic leaders, the majority of Congress has shown that they are unwilling to compromise with each other and have been unable to pass a bill. As a result, the American people may not be receiving any form of aid for a very long time. After talks between the Republicans and the Democrats broke down, President Trump has taken executive action in order to help the American people. Just recently, President Trump signed 4 executive orders covering payroll tax deferrals, eviction moratoriums, unemployment benefits, and student loan deferrals. On this page right here, you can see the moratorium for the payroll tax obligations. Scrolling down here, we can see that the payroll tax deferrals are to begin during the periods of September 1st, 2020 through December 31st, 2020. Some things to note about the payroll tax deferrals: it only applies to the 6.2% of Social Security tax and doesn't apply to the 1.45% of Medicare tax. In addition, the payroll tax deferrals may be forgiven if Trump is re-elected. Lastly, this payroll tax deferral is only applicable to any employee who makes less than $4,000 biweekly. Next, we'll talk about the eviction moratorium. On this moratorium, the Secretary of Health and Human Services, along with the CDC Director, will consider whether any measures can be used to halt the evictions of tenants failing to pay rent due to the pandemic. In addition, the Secretary of Treasury and Secretary of Housing and Urban Development will find all available federal funds to provide temporary financial assistance to renters and homeowners struggling to pay rent or mortgage due to the pandemic. Next, the Secretary of Housing and Urban Development will take action to promote renters and homeowners to avoid eviction for foreclosure due to the pandemic hardships. Lastly, the Director of the FHFA will consult with the Secretary of Treasury to review authorities and resources that can be used to prevent evictions and foreclosures for renters and homeowners due to the pandemic hardships. Next, let's talk about the unemployment benefits. This is an additional $400 a week. However, you must make at least $100 a week in order to qualify. According to this article, the federal government will be contributing $300 a week, while states are to contribute the remaining $100 a week in unemployment benefits. These claims are retroactive starting August 1st of 2020. It's important to note that this part of the executive order will expire if the federal government steps in to help aid in the unemployment compensation. In order to fund this, the government will tap into the Department of Homeland Security's Disaster Relief Fund, also known as the DRF. Now, mathematically, this may only last about 1 month until all the funding from the DRF is liquidated and the country must rely on Congress to pass a bill which hopefully will involve stimulus checks. Lastly, we'll talk about the executive orders on student loans. According to this article right here, if we read it right about here, it says that any federal student loans held by the Department of Education are to be deferred without interest until December 31st of 2020. Now, let's move onward to my portfolio to see how it's doing this week. Looking at the past year, my portfolio is down 7.58%, which is a loss of about $555. Looking at the past quarter, my portfolio is actually up 13.54%, which is a gain of about $1,103. Looking at the past month, my portfolio is up 5.17%, which is a gain of about $455. Looking at the past week, my portfolio is up 2.77%, which is a gain of about $250. And lastly, looking at the past day, my portfolio is up 0.82%, which is a gain of about $75. So overall, my portfolio is actually up this week pretty much in line with the markets. In addition, the dividends earned by this portfolio is still here. In fact, if we take a look at a time lapse, it has increased significantly over time. This earned dividends number is the reason for investing in this kind of portfolio, because even in market downturns, this number will continue to go up regardless of what happens, and the only reason why this number would ever stop moving forward is if all the companies that I invest in suddenly stop paying a dividend. Moving over here, we can take a look at trading that has occurred in my portfolio. On this day right here, my portfolio bought $13.18 from Tootsie Roll. Over here, my portfolio sold off out of Brookfield's Renewable Corporation. This was an automatic sale because I believe the company had undergone a split and I didn't want to hold this in my portfolio, so it automatically sold this portion of my portfolio off automatically. Lastly, looking over here, I did some reconfiguration in my portfolio. If we look over here, we can see that I sold a lot out of my energy sector pie. And I put the money that I sold out of this sector into companies that I thought that would do very well in this current economic climate. Right now, oil has been hit pretty hard, and until this pandemic is under control, oil will continue to go down further and further, and I want to try and minimize the losses as much as possible. That's why I sold out of a bunch of oil stocks and put them into other holdings which will do a lot better. Eventually I will buy into oil once again, but just not right now because this pandemic has limited traveling and a bunch of other transportation methods which subsequently affects the price in oil. Either way, I bought shares in all these companies because they were at pretty fair pricing for me to dollar cost average my way into my targeted positions. Furthermore, on a fundamental level, all these companies are pretty solid for the future of their businesses despite there being a pandemic. All these companies pay a dividend for holding shares, and ideally these dividends are set to increase over time. So as long as these companies pay out a dividend that increases over time so that compounding interest can take effect, then I will gladly continue to buy shares of that company at discounted prices. In addition, this week I have also earned a decent amount of dividends from various companies which I can use to reinvest in my portfolio. Just taking a look here, I earned 2 cents from ABM, 58 cents from AT&T, 52 cents from CVS, 5 cents from Campbell Soup, 6 cents from General Mills, 16 cents from Verizon, 27 cents from Lowe's, 6 cents from H.B. Fuller, 8 cents from General Dynamics, 8 cents from MasterCard, 6 cents from National Health Investors, and 1 cent from Pentair. These dividends that I earned are a result of me owning shares of each company. This is money that I didn't have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to as passive income, earnings which are derived from an enterprise like a rental property or a company which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. This concludes the update portion of my portfolio. If you found any part of this video helpful, then please leave a like on the video and perhaps share it with someone that you know who can use this information in order to better their lives. Again, if you like this video, then please give it a thumbs up as it will help the channel grow immensely. If you have any comments or questions, then leave them down below in the video and I'll do my best to personally address it, either in the comments or answer it in future videos. I greatly appreciate everyone watching my videos until the end, and I hope to see you all again very soon.